State-owned power utility Eskom expects to submit its tariff application to the National Energy Regulator of South Africa within the next 2 weeks. Eskom says the final touches are being put to the submission. The company was forced to revise its third multi-year price determination period following a request from government. With us to discuss the details, Chris Yelland. He's from EE Publishers. Welcome, Chris.
Hi.
So this is the third round. It just seems like, as a consumer, this long, endless, painful process of witnessing these prices increasing.
I think if we just look back, over the last 5 years, the price of electricity has increased 3 times. And if what we hear is correct, that Eskom are looking for a 15 to 19% per annum increase for the next 5 years, that'll increase the price of electricity by a further 2 to 2.5 times. Multiply 3 by 2, you get 6 times. The price of electricity will have gone up 6 times in about 10 years. So that's what's on the cards for us, and we have to understand really what's going on here.
Chris, what's the maths of that? On what basis do they determine these price increase requests?
Well, the regulator has methodology based on rate of return that they want to guarantee the utility on capital employed and expenses prudently incurred. But I'm looking at this with some interest because I see some parallels between what's going on at Eskom and the price of electricity with what's going on in the e-toll business. And if I could just elaborate a bit on that. You see, e-tolling is about the user pays. In other words, a company, Sanral, raises debt on the back of government guarantees, and the user of the roads or those highways pays through a tariff. And in fact, that's what's happening at Eskom. The capital build is being funded by debt on the back of government guarantees, and the user of electricity is going to pay through the tariff. The result is remarkably similar to the e-tolling situation. The tariff rises very, very sharply and is very, very, very painful, both in inflationary terms and on the productive economy. That's what we see with e-tolling, and that's what we're seeing with electricity. But what are the alternatives? At the moment, we're looking at funding these projects by debt and the tariff. The alternative, of course, is equity. And equity is really about funding this program, this capital build program, from the fiscus, from the tax base. In essence, what it is it's broadening the base of the people who pay. And that's exactly what the people who are opposed to e-tolling really want. They don't want the user to pay because it's too painful for the user and the economy. They want the general population to pay, even those who may not be using it directly. So the parallels are very, very similar, and I would say that there is a need to broaden this base because the consequences, the cost of social unrest could be very, very high. And we already saw that social unrest with e-tolling. And we are seeing it now in the mining industry, which ultimately is about electricity as well, because it's all people's costs are going up.
But arguably you're exchanging short-term pain for long-term pain, because if we don't pay now, our children will be paying more.
Yeah, Chris, I was wondering, the most expensive electricity in the world is that which you don't have, in fact. If you don't have electricity, it's extremely expensive. And so what we're having in South Africa, in fact, going from a situation in which we were too cheap and too uneconomic to one in which the market clearing price of power has got to be in line with the rest of the world, and that seems to me where we're heading. That our pricing will be on a par with the same sort of electricity, coal-fired sort of electricity elsewhere, and possibly it's just a fact of life that we're going to have to get used to. Otherwise, those lights will go off, and we won't be able to fund the expansions.
I agree with you. It's a question of timing. And if the price increases are too sharp and too quick, we can have social unrest and in fact, damage to the economy, the productive economy, to the extent that we could even be left with stranded assets if demand does not go up as expected. And we build based on our current build program, we may be left with power stations that are not even being used properly. And that will be really expensive, because those costs still have to be paid by a smaller group of customers, a smaller amount of kilowatt hours.
Does that mean that people simply stop consuming electricity?
At some point, if the prices go up too high and the smelters close down and the mining industry reduces their demand, we could be left with stranded assets. So I believe we've got to manage the price of electricity very, very carefully. Number one, to keep the productive economy going, and number two, to avoid social unrest.
Well, Chris, you talk about things being shut down. Already in winter, we've had things being shut down.
Yes, indeed.
The reason we lost our ferrochrome advantage to the Chinese is because the Eskom came in and paid the ferrochrome producers not to produce. I mean, we've already seen the trouble coming through. What's the balance that we're going to strike there?
Well, you know, in Eskom's last, when they released their last financial results, they announced that, in fact, the demand for electricity in the last financial year was only 0.5% higher than the previous year. Why is that? It's because of exactly what you say. You know, we say we don't have load shedding, but in fact we do have load shedding. Eskom is paying customers not to use electricity. Well, that's a form of load shedding. Not only is it load shedding, but it's very expensive load shedding because you actually have to pay people to switch off. That's what they did with the ferrochrome industry. They paid the smelters not to use electricity during certain periods of the year.
But just on the pricing, you've got to amortize these assets over 40 years. From a straightforward normal accounting point of view, that, you know, you've got to bring this back to the fact that there is a life of the asset, which is approximately 40 years. And so I struggle with the concept of pushing the pricing time frame out yet further, and they've done very sophisticated modelling at Eskom on this, and this is the sort of minimum you require to have that happy medium.
Look, I'm not a financial expert, but a company needs a certain debt-equity ratio, and at the moment the equity is low and the debt is high, and the business is not properly capitalized, and they're capitalizing it or they're financing it on the back of government guarantees. Of course, the government would argue that they are also funding the company because they've forgone their dividend for the last couple of years, and in a way that's helping to keep the price of electricity down. In fact, that's how they reduced the price of electricity from 25%, was what it was planned to be last year, to 16% by Eskom, by the state foregoing its dividend. So they would argue that they are making putting in equity of a form. But I think there is a need for greater equity and less funding from the tariff.
Chris, we've got half a minute, so lest we fail to sleep tonight, because one does feel worried listening to you. What's the good news in all of that? What's the hope?
I'm not so sure that there's a lot of good news. There's a lot of rather negative news, not only you know, locally but also internationally. International economy, you know, is actually saving Eskom's bacon in terms of the lights staying on.
Because of reduced demand?
Yes, because of reduced demand. And I'm worried that if the global economy continues this way, we could actually be left with a surplus capacity, which will be very, very expensive for the users of electricity.
Chris, thank you very much.